Hi, and welcome to another edition of Weekly Market Report by Traders Club. As per usual, anything that we discuss here is available in the public domain, and therefore it should not be considered to be investment or trading advice. We are simply sharing the information for the benefit of the club members. We can start our report by looking at Apple Computer's a weekly time frame chart showing clearly defined uptrend and rising trend line colored in blue. Purely because last week we started our weekly report with a daily time frame which was indicating potential head and shoulder topping pattern and the loss of that neckline. Support is currently indicated here by this rising trend line at around 450, 400 level, and also with 200 period moving average on weekly time frame at around 351, which ties in nicely with the potential supports that were projected by the head and shoulder pattern as well. Stochastics is currently at the oversold, not curling up just yet. MACD is moving in that direction as well as RSI. So this is still in clearly defined uptrend on weekly time frame. Our daily time frame is showing us this ugly head and shoulders bearish setup as identified in our previous reports. And as we already discussed, the loss of this neckline at 500 level was quite significant, and therefore we dropped lower. Projection is from this shoulder to the neckline would give us probably about 400 as a next support level. Alternatively, if the price wants to go back up, we have quite a lot of resistances overhead now because this previous support is now newly formed resistance. Also, 20 period moving average at 509.53 and falling trend line, and also 50 period moving average at 532. So quite a lot of resistances, one after another on the way up. S&P made another high. We are close, or we are at that psychological kind of round number level, 1500. Although this is clearly defined uptrend, all of the indicators, including RSI, MACD, and stochastics, are in overbought levels. They are lagging indicators, and therefore these are not the triggers for us to short this market. They're simply showing the fact that this price action move is actually quite extended at the moment, and there is quite a lot of strength in that price action moving higher. Potential resistance on the way up is located at 1516 level, followed by 1530 and then 1550. However, this is clearly defined uptrend. We are moving higher, but it is quite toppy at the moment. So I wouldn't be chasing these longs from these levels. I would be happier to buy on a pullback if we get a chance. Alternatively, actually at the same time, I wouldn't be brave enough to short this just as it is. Unless it's a speculative short position, because we will be trying to pick the top, and that's always the dangerous strategy. So the daily time frame moving averages would provide us with logical support. If this appears to be a topping level, we are looking at potentially 1466 as a support. Prior to that, we would have 1474, which is previous high, and then any of these fib retracement levels, assuming that this is the top. At the same time, we can very quickly move higher to retest this rising resistance trend line and upper Bollinger Band as well. So we can move higher without any problems. FTSE, obviously we reached 6284 level very quickly, actually much faster than anybody anticipated, the next logical level for FTSE would be at 6377, but we would need to change the time frame into weekly in order to see that level as a previous high. Red flag, RSI, MACD and stochastics are all at extremely overbought levels, and as I said earlier, these are just lagging indicators. These are not triggers for us to short, but it's it's a warning us that potentially this price action could be extended and some kind of controlled pullback or a corrective action would be welcomed by most of the market participants, because it would allow us to enter at a better level. Volatility index dropped even further, losing that significant support on daily and weekly time frame, and now we are retesting it from underneath. This was previous support, now it's newly formed resistance. However, opposite is true to all the indices that we checked so far. MACD, RSI and stochastics are close to or at oversold levels and curling up, indicating that potentially VIX could spike higher. If that's the case, then resistance levels on the way up would be around 1350, 1440, followed by 1564. If we see that spike higher in volatility index, it would indicate that S&P and other indices are pulling back correctively to those support levels that we noted earlier. Alternatively, if we stay at these extended low levels, S&P would simply rally higher. Apologies for my coughing. So gold, we had a very fast pullback from these 1695 levels. We were unable to move higher and break above 50 period moving average on daily. However, this still appears to be bullish, and in order for us to justify the bullish flag pattern, we would need to move very swiftly higher from these levels and close as close to 1700 or above 17 towards 1720 in order for this bullish flag to play out. So resistances on the upside for gold are at 1671, followed by 1695. Alternatively, we can very quickly drop lower to retest this falling support line, purely because we are currently sitting at 200 period moving average on a daily time frame, and if the price action moves below, it could potentially be bearish. WTI, American NYMEX traded oil, this is weekly time frame. We are seeing this protracted consolidation range with the creation of lower highs currently, and there is obviously a triangle within that wedging formation as well. Price action moved higher above 20 and 50 period moving average and closed successfully above this falling resistance trend line, and we are comfortably sitting at around 96. We can very quickly move higher because there is nothing there to stop us going higher. Obvious resistances would be at 97.50 level, followed by 142, which is this previous high, followed by 103.74 before we move higher and retest 110, 115 levels. At the same time, if the price action pulls back, moving averages at 93.66, which is 50 period, followed by 90.43, which is 20 period moving average on weekly, would act as a point of support. And lastly, dollar index carried on consolidating further. We are yet again retesting and playing around that psychologically important 80 level. We've closed, price action actually closed below curling and slightly falling 20 and 50 period moving averages on daily. And if it stays like this, it can very quickly drop lower to retest about 79.35, 79.57 levels, even 79 as well. which would be quite bearish for dollar and obviously bullish for other currencies like euro dollar and so on, dollar yen. Okay, hopefully you enjoyed it so far. This was very quick, and I'll talk to you soon. Thanks, bye.